Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, December 29th, 2023. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. The last trading day of the year before we turn the page to 2024. This year, and especially this quarter, has kind of played out in a lot of ways the way we were kind of hoping. Rallying off of the low end of the year back to the midpoints of the year's range from the previous year, and working their way perhaps back toward the previous year's highs over time. Market structure has been in play, the 4,200 level to 4,600 level, for example, down to 38. Those major market structure levels have been in play, and now we're finishing the year at the highs of the year after one of the more tremendous bullish quarters that I've seen on record here. If we take a look at the quarterly range here, in many cases this quarterly range is the yearly range in some of these cases. Tremendous checkmark quarter to end the year at the highs of the year. So now heading into next year and next quarter, naturally after such range we may begin to see either a pullback and compression, or a pullback with compression, or compression that eventually leads to some expansion, and we may look to see some sort of digestion of the recent price action to the upside. Open gap here from a rollover that could be targeted here early next year. That's around 4,600. So again, after such a bullish quarter, after stretching it, the price range so much and closing at the extreme, early next quarter we could be looking at signs of rejection that could lead us back to a gap fill and maybe into the quarterly midpoint. That'd be 44.81. As of today, likely to finish the day very similarly to the last couple of days. Range bound, back and forth. We finished yesterday as a doji. That was kind of the thought process here, is that we could go outside day up, outside day down, ultimately finish with a doji-like session as this thing stays within a very narrow range, within a very bullish uptrending market. So look to fade the edges with an upward bias, but again, today could be a day to sit on hands as this market quietly chops mostly sideways. If we take a look here at the NQ bullish as well, very, very strong doji-like day already in play. Again, sideways with an upward bias, likely to finish the day at or near the highs of the year. Within this upward trend here, this market has been tremendously bullish. No pullbacks to really speak of, only pullbacks within range. So after rallying for 3 days, it would pull back within that 3-day range. Basically, that's about it. You're not seeing elongated pullbacks below previous lows or anything like that. This market has been strong. You look at the quarterly range right here, huge quarter, check mark quarter up. That's exactly what we were looking for heading into the quarter. Outside quarter up is what we were looking for, and it did that very, very quickly and then some. So very strong, elongated price range here, and there could be early rejections here that bring us back to, say, the midpoint of the previous month and the midpoint of the previous quarter. Those could be in play. You have a gap fill here that comes into view at about 16,130. So those are some early ideas for next year. It would be odd to see this thing explode higher and continue at this pace, but stranger things have happened. So again, watching for signs of rejection to suggest that we may see a quick pullback that could at the very least set the early range for trading for the year. All right, taking a look here at crude oil. Crude falling a bit here over the last couple of sessions. This market had been en route back higher toward value to end the year here, and then over the last couple of sessions really failed. You got to drop into that 72.25 zone that we talked about, and then price dropped even below that. Now holding in a very, very narrow range here at the lows of this move. This is an 85-cent range, 35% of average range right now, and that's 35% of a falling volatility market. So very, very narrow and quiet. This is likely where we finish the year here, somewhere around this 72 level, perhaps, as this thing trades up and down and all around. This is also the center of the month's range. So you have the high of the month here, you have the low of the month here, your midpoint is there. You're going to close near the mid of the month. And what that's going to open up is an early move to the extreme to begin next year. If it's down, it could be a tremendous opportunity to trap below the key range low and return it back up. And if it's up, it could be an opportunity to look for, again, a continuation toward these upside targets if we get a positive breakout. So watching to see how this develops here today, but mostly compression ahead of the new year. Looking at gold. Gold here down nearly 0.7%. This one here pushing higher, reaching for 2100, but keeping prices above 2100 well rejected. You can see here the midpoint of this tremendous rejection day back here, which was the beginning of December. That midpoint integrity has held, and we're now back down. That was very, very important for the bears. Very important to keep that integrity right now. Another thing, 2080 to drop back below 2080, which is the major market structure edge of the last 4-year range. That's very important for the bears to keep in check. And what that could do is keep prices back into the lower part of this key range at the very least, with a shot to continue downward within the larger 4-year range. Larger 4-year range you could see on a weekly time frame, but looks like this. And for the most part, that 2080 level right there has been resistance, and you drop back down toward 1880, the middle of the range, with a shot to go back down toward even lower portions of that range. So again, keeping an eye on this zone here, but for the most part, 2080, the big level there, and we are down below it here at the moment. And that could be an indication of overvalued market. We're also seeing R3 sell signals come into play. That means you're three standard deviations above value right now, and that would tend to be an opportunity to return price back to or toward value. So again, things are looking a little down here for gold as it falls back below 2100 and that 2080 market structure edge. Taking a look lastly here at the YM. Tremendous check mark quarter. Actually, not even a check mark quarter at all, really. You had actually little tiny portion here, and then an explosive move to the upside. Tremendous amount of points there, thousands and thousands of points. What is that, nearly 6,000 points? Over 5,000 points of range. And straight up, no pullbacks unless it was within range. Again, 4 days to go up, 1 day pullback within that range, and then you continue through it. These days we're within range, explosive movement. That movement can't continue forever, and the expectation now would be for some compression to digest that move. Naturally, you have this 36.5 level here where you got that explosive push up on a gap. All of that can be retraded through to create some market structure above here, but at the same time right now we need some sort of reaction. If we can get a rejection, perhaps an impulsive move can happen. An impulse move could give us a nice key range to start the year. That would be very much needed right now. Otherwise, we're just kind of working off the same short-term market structure. We do have an open gap here that could be in play. And again, if we get a rejection at the extreme of the quarterly range, that could open up a return back toward the midpoint of the range. 35,249 would be that midpoint. So we'll see how we begin the year. As of today, range bound with an upward bias here. A little bit of a down pre-market, but overall expecting this thing to remain mostly flat and close near the highs of the year. All right, that is it for now. We'll see how this develops here heading into the rest of the session. Happy New Year, everyone. We will be back with another pre-market video and trading room session January 2nd, which will be next Tuesday. Everyone take care, and I'll see you soon.